space at this point, but rest of the pockets are still holding up. Let's actually pull up some of the other index contributors that we can mark out for all of you at this point. So the market weakness is largely getting contributed by the heavyweights. Look at Reliance Industries. It's contributing about 30 odd points to the weakness in the markets today. But HDFC Bank is the top contributor on the downside, 35.5 points on the Nifty being contributed on the lower end by HDFC Bank. Then TCS is another one, 27 points being contributed from TCS on the lower end as far as the Nifty is concerned. Now Bharti Airtel, M&M, Infosys, these are all the stocks that are contributing on the downward side. What's contributing on the positive side? It's HUL and it's some of the private sector banks like Axis, Kotak. You also have Sun Pharma, SBI Life and ITC contributing slightly on the higher side as well. Let's welcome our guest on board. Mr. Kranthi Bathini joins in, Director of Research at Wealthmill Securities. Warm welcome to you, Mr. Bathini, and good to have you with us on the program yet again. Well, first up, I want to understand from you, we were talking about some consolidation in the market playing out the last time you were with us on the channel. But what do you make of the extension of this weakness that we've seen in trade today? Does it have to get contributed to the TCS numbers largely? Is it something else that's also weighing on the sentiment, sir?
Hi, Sakshi. Good afternoon to you. Yes, markets are still in a consolidation phase. Of course, we are not receiving any kind of strong positive momentum that can take the markets to new highs. One thing is the global environment is really what is certain in the global environment is the uncertain nature of these trade deals are concerned, that has been creating some kind of uncertainty in the global trade. It can be between US and Japan, US and China, who are the strong trading partners in the Asian economy. That's where the worrisome is taking place at this point of time. And we started with a negative start with respect to the earnings season is concerned. The TCS results are not impressed, and also the guidance is looks very subdued at this point of time. That's what creating some kind of a extra caution at this point of time in the market. But the liquidity is quite strong in on Indian markets, and we have both the domestic and foreign portfolio investors have been buying on Indian markets selectively. One of the level to look in the medium to short term is it is psychological level also 25,000 Nifty. As long as we are holding this level of 25,000 level of Nifty, the direction of the market medium to short term is positive. We can see some kind of aberrations here and there, but we need to closely observe the level of 25,000 level of Nifty.
Okay.
So we need to hold on to that level.
Okay, Mr. Bathini, what we'd been pointing out to all our viewers also, and in our discussion with all the experts, the matter with Jane Street that started off last week is probably again getting into focus, and that's why you can actually see the stock of Bombay Stock Exchange falling up to 4% in trade today. Now, what's happened is that there are reports that indicate that SEBI is now going to be expanding the probe into Jane Street into Sensex options as well. Remember, so far, the decision of SEBI in impounding some of the unlawful gains that SEBI marked out for Jane Street and banning Jane Street from the securities market came in from the 21 days of a study on the Nifty and the Nifty Bank options that they had studied. But now expanding the surveillance and probe to even Sensex options does, bring in some kind of a volatility yet again. And therefore, you saw Bombay Stock Exchange stock fall by about 4% in trade today. We are already looking at, Mr. Bathini, some volume clampdown after Jane Street has been banned from, trading in the Indian stock markets and banned from the capital markets completely. We are seeing the volumes of NSE also climb down. The notional value loss has also been seen. How would you really look at in case SEBI is going to be probably taking this much further, continuing to find out, where else were some signs of manipulation seen in the markets and were other indices also compromised in certain way? How would you really look at the capital markets related stocks, exchange related stocks like BSE?
Sakshi, if you see the entire episode of Jane Street has been taking place from the past fortnight and all. It is there on the line, right? And with respect to the BSE stock is concerned, the stock has been a multi-bagger stock for every investor who have invested in the past 24 to 36 months. So any kind of these kind of major kind of a reaction, the news do comes, okay, that can inevitably create some kind of a knee-jerk kind of reaction. That's what we are witnessing in the BSE stock price is concerned. The primary objective of the regulator is to protect the uh, interest of the retail investors. That's what the regulator has been doing with respect to the Jane Strain probe and also banning them into the derivative markets are concerned. By and large, in terms to answer your question, the impact of Jane Street on the volumes of the exchanges are concerned, it's going to have some kind of impact because these are they are the one of the large player in the market. So some kind of impact would be there in the medium to short term, as the markets are currently going through a turbulent phase in terms of the global uncertainty with respect to the trade deals are concerned, and also as we are entering into the earnings season, so investors are trying to stay at a sidelines at this point of time. So some kind of a major impact is coming because of these macro news than the Jane Street news is concerned. That is the reason some kind of a subdued activity in the market and impact on the volumes. Once we get through the clear indications of these trade deals, and also once we kickstart into the earnings season, as the earnings season progresses well, we can see once the volatility that comes down in the market, we can see the volumes bound to go up. But the kind of restrictions and the regulatory measures to protect the interest of the investors, what the regulator is doing, okay, it is a welcoming move. End of the day, we know the data, okay, what kind of money the retail small investors are making in, especially in derivative market. That's where the regulator is much concerned. So it's going to have some kind of a medium to short-term impact as the economy resumes its growth path. I'm sure the volumes are going to rise, and we are at a scratching phase with respect to the capital markets in India. Still, we just reached a range of 20 crores demat accounts. There is a much more upside, and new platforms and new apps, new broking companies are coming to democratize the capital markets in India. So the volumes are bound to go up on a longer term basis. These are the kind of a short-term blips on the market volumes are concerned.
Okay. And now, Mr. Bathini, within the capital markets, opportunities that exist, where are you more confident of? Are you looking at wealth management players? Are you looking at broking houses or exchange-related stocks? What looks good to you, especially now that we are heading into, some of the big IPOs also coming in probably this year for, players like NSDL that could be coming in much sooner, maybe by the end of July or August. And for NSE, last quarter of the current fiscal year is what is the big expectation there. How do you think that is going to change the dynamics of what the opportunities present themselves to retail investors? What are your top favorite stocks from this basket?
Sakshi, I can say with respect to the financial market, especially the capital market related stocks are concerned, there is an ample upside that is there, but one need to also consider this is a cyclical kind of the business. Okay, sometimes there would be turbulent times, and also the global factors are by and large going to influence these stocks performance on a medium to short-term basis. But since the financialization of assets are taking place in India right now, and we have witnessing a smartphone revolution, the digitalization is taking place. So many of these financial companies are going to get benefited. It can be the asset management companies or market infrastructure companies like MIS, the CDSL, and NSDL is going to get listed. And also the stock exchanges as a quasi regulators and also market infrastructures are concerned. These are whole host of, and also broking companies. We have witnessed Geo, Reliance Geo getting into um, Geo Financials getting into stock broking. So these are the newses that are coming. So there is a whole host of companies that are going to get benefited over a period of time. But one thing is what valuations we are buying, how we are buying this growth, what price we are paying is extremely important. I believe on a medium to longer term basis, all these host of companies are going to create uh, create wealth for the investor for a medium to longer term basis.
Okay, fair point. Mr. Bathini, help us understand when it comes to the earnings season. We started off by discussing TCS and IT, but overall earnings season, are you already penciling in where the outperformance could come in? Are you looking to play the earnings season by way of selecting certain sectors and stocks, sir?
Yes, actually, with respect to the stock selection in Bosan, we are looking at the stocks like the DCP, Defense, Capital Goods, and Power. These are the stocks, yeah, the sectors. So these are the sectors we are looking, and also the consumer is the FMCG companies, consumption streams, and also banking and financial services. We have witnessed a rate cut and any dip in the stocks. The in these sectors, okay, can be warranted by in the medium to long term to cherry pick the stock. But we can expect some kind of a positive momentum from these sectors like the defense, capital goods, power, and also the consumption. These are the sectors we're actually tracking.
Okay, got that. Also, Mr. Bathini, wanted to ask you, we've been seeing the markets also turning defensive in the last couple of sessions when we've seen consolidation play out. FMCG plays and the stocks within this basket are coming back to the focus. Pharma stocks are coming back to focus as well. Do you think FMCG is a good hiding place in this time when the markets are either directionless or, bound by a lot of uncertainty globally?
Sakshi, in the medium to short term, yes, you're absolutely correct. These are the places can be the hiding places. But if you observe the FMCG, thanks to this quarter pickup in the consumption, otherwise these stocks have been in a consolidation. The big names like HUL, Dabur, and different FMCG companies have been in a consolidation phase. Uh, but for investors, for a medium to longer term perspective, and if the investors' horizon is long term, and also if the investors have low risk appetite, these are the sectors in the FMCG one can pick up, but there is a lot of disruption also taking place in the FMCG consumption theme is concerned in this listed space. There are some kind of a regional brands, local brands, and organic kind of a brands have been rising. The local domains have been going up. That's where the medium to short term their margins are getting impacted. But these companies carries a strong business model and also their supply chains are unmatchable. So the large cap stocks in the FMCG they're going to thrive.
Okay, well, Mr. Bathini, we'll thank you then for your insights on the markets. Appreciate your time with us, and thank you so much for highlighting the key outlook on various sectors that we discussed.
Always my pleasure.
Thank you so much.